Hey traders, welcome to Charts and Coffee. Great to see everyone here. All right, so what do we have coming up today? What is on the radar, not just from a symbol standpoint, but what is on the radar from the standpoint of economic events, not only this session, but coming up. And I think that's really important to look ahead and know what market participants might be thinking about in terms of not wanting to step out in front of size and volatility, etc. Today is pretty sedate. We had a lot of data out of Canada. If we're playing the loony, which I am not, something to keep an eye on. The 10 a.m. hot zone of the consumer confidence, I would not consider that a primary macro release, unlike GDP tomorrow or even the PCE for sure, which is the biggest event this week in terms of data. I would not consider this to be in that category, but yes, when we're looking at some of the comments from the rate statement or comments during press conferences from the Federal Reserve, from Powell, the idea here is he going to cite consumer behavior, retail behavior, consumer confidence? Yes. Is it a major macroeconomic pillar that's going to move the expectations for the target rate probability much? Probably not, but we can keep an eye on it. What do I want to know? Well, right now we're still sitting firmly at 4.75% to 5%, with 4.5 to 4.75 in second place, and in third place, 5 to 5.25. I'll just keep an eye on that for May. I'll keep an eye on any adjustments there. Even March. Let's keep an eye on March, gang, because it seems that we might peak in terms of rates in March of 2023. And that brings up the next question, which is, when do we pivot? When do the powers that be decide to start cutting rates? The first glimpse we see, and it's just a glimpse, but the first glimpse we see at a definite maybe would be September of next year, as we start to see a quarter point cut start to become a little bit more possible versus the hold, right? So these are things we'll talk a lot about as we go into the new year. And that's where the data is going to hit the hardest. What does that do to expectations about rates? Now, we're in a different environment right now. I'm not in monetary policy mode right now. That's going to play out likely next year. The mode that I'm in right now, this is a great update on the Countdown Trader, and that is, how are we processing? That's not what I wanted to show you all, but how are we processing? Let's go over here, countdowntrader.com. How are we processing these seasonal events? What is so important about these seasonal events? Does it matter? What do we need to know? And check out the update there. What are those year-end tendencies? This is a conversation that Trish and I were having here in the office. And, we throw these words around like Santa rally and window dressing, window undressing, tax loss harvesting, right? But what does it mean to us as traders in terms of near-term momentum and trends? That video is how I perceive this time of year behaves and why. So you can check that out over at countdowntrader.com. All right, gang. Well, let's get on to the best part of our show, and that is, of course, your questions. Let's do it. And first up here is, hey there, Top Spin. And the question is, how to deal with this type of setup. I'm just going to grab the first one there, Top Spin, and that's STLA. How to deal with this kind of setup. Well, structure dictates strategy, and or ultimately how we're going to set something up. Neutral market, oversold on the slow stochastic, and it's just below the 200. I can't say this would be near the top of my list. So since we kind of went through that one really quick, let me go through your next one. That's VVV. VVV is more interesting. Same conversation, Top Spin. Neutral market, oversold stochastic, sitting on the 200. That would be definitely something I'd keep an eye on, close to that 200 exponential. And then lastly, AXTA, that's easy. Short the rip. It's a downtrend. It's absolutely a downtrend. Hey there, Debbie. How are you? I rock Benz. Oh, I absolutely adore the guys at Benzinga. Today they threw me a couple curveballs, which was great. And we got to talk a lot about some of what I was mentioning is like the countdown trader. What is the behavior this year and how markedly different my approach to the early part of the year, February, January, is in terms of names, say like AXTZ or Amazon or Tesla. Right now is not the time to start bottom picking, gang. Santa or no Santa, now is not the time to bottom pick. This is where the window undressing is going to occur. This is where the tax loss harvesting is likely to occur. This is where weak gets weaker and strength gets stronger. And yeah, I love the conversation. I'm looking forward, hopefully, to catch them early next year so we can pick up on the conversation. All right, next up, Robert. Good morning. Thoughts on ITB for a long? Yes, I like the long. What might be in store for home builders going forward? Okay, so first of all, ITB. When I step back and look at the structure, and going back to Topspin's question, structure dictates strategy. In a trend, I don't give a rip about what's happening with the slow stow or any oscillator for that matter. Don't use oscillating tools, overbought, oversold tools in a trend, right? Trends are imbalance, right? It's the opposite of what an oscillator is looking to find. And then if I'm looking to buy the dip, absolutely. What might be in store for home builders going forward? Well, I can talk about the macroeconomic environment where if we're looking to peak and just sort of stop with the rate hikes come March or May, remember the market, including bonds, mortgage rates, they're fairly forward looking. Now, I don't expect mortgage rates to come down, but I don't expect them to continue moving higher. Why does that matter? Obviously, names like ITB and XHB would be susceptible to that. How about we just stick with, and I'm going to look at it this way: what are the trends within ITB, DHI, Lennar, NVR, Pulte Homes, right? Toll Brothers. Those are uptrends, and I'll continue to look for buy the dips in those stocks, and of course, in ITB, the tide as well. As long as those are heading higher, look, I'm going to presume that I don't know nearly as much about what's happening in DH Horton or Lennar or Pulte Homes or Toll Brothers as much as the folks within those companies do. I'm going to presume they know more, and I'm going to presume that traders who specialize in this type of sector are going to want to buy certain names and not buy others. And I'm going to follow the price because price, what's the level, what's how do we level the playing field in terms of all the things that I inevitably could not possibly know? I look at price, I look at volume, right? Because a chartist, not even a technician, a chartist believes that all those news and headlines and data and fundamentals are already priced in. So I'm just going to follow price and ideally stick with the trend. And as long as that peak target rate still seems to be 4.75% to 5%, it's hard for me to think that bonds can't keep going higher, that gold can't keep going higher. And maybe that also, in terms of mortgage rates and home builders, construction, yeah, that. And we keep an eye on housing starts, keep an eye on building permits. That's going to be more data targeted to, what going forward we could see out of these names. But look, if I see those in uptrends, I'm going to follow the trend. So thanks for the question. All right, Princess, join the SSM room late November. Well, awesome. Thank you. And great to have you. You keep ending up on trades that end up losers or missing the winners, wondering if it's common as a beginner and just requires more experience to fix. So it's a great question, Prince. Yeah, and I know that a lot of traders think, well, how do I manage losers? The first thing that you're going to be inundated by when you enter the Sector Secrets room, the Sector Food Dojo, is 2 videos and notes on position sizing and risk management. Because my attitude towards trading, and the reason I've never blown up an account, it's a really simple attitude. And it's simply this: manage risk like the trade is going to lose, set targets like the trade won't make a new high, and position size to be able to trade again tomorrow. World's most boring trader, right? So if I'm taking a look at, for example, some of the positions we have on right now on the daily time frame. Now, I'm going to leave day trades out of it because, and I don't mean to sound braggadocious, but it's a total humble brag. We've been killing it on the day trades since June. And that's one of the things that we like to do in the Sector Secrets room, which is how do we manage different time frames so that we can be on the end of the best potential follow through, right? Not just finding setups, but setups that have a higher probability of following through. That's been day trading, right? That's been day trading. That's why John has quick hits. That's why I teach a day trading class every summer because, 30 plus years, he and I both, we know that there are certain times where it makes sense to be short term. All right. But what about being in multiple trades at the same time? Because we're all subjected to the cherry picking, right? We're all subjected to that. Oh my gosh, it feels like I'm always picking the losers. One of the things that we always remember in sector secrets is we can trade a small account, medium sized account, large account, Godzilla sized account, because we're not trading expensive names. Never are you going to see me enter a 30, 40, 50 point option. That's 30, that's 3,000, 4,000, $5,000. Think about anyone who's in the sector room. What are we buying? When we're day trading, it's usually options that are less than $2 to $3, usually even less than that. So they're very easy to trade in a cash account. No pattern day trading rule. That's one thing I teach you all. And then when we're doing our overnight swings, think about scalability. Liquidity allows a larger trader, like myself, to buy 20, 30, 40, 100 options. And it allows maybe a medium sized trader to grab 5 or 10 options and a small trader to grab maybe two because we're trading basically liquid, inexpensive strikes. And that's where I would say part of it is how do you position size prints in a way that you think, gosh, I might be in 5 or 6 positions. Let's not go all in on a few. Let's make sure that I'm able to take advantage of the different setups that go out of the room. So I think it's definitely part of the learning curve, especially if you've been coming in from a sort of all in, this is the winner type attitude to the one that I teach, which is I don't know which one's going to win, but I'm going to position size like everyone could lose. And then I'm going to make sure that I'm not piling into a single narrative where I am in a very binary state of all of them win or all of them lose. What does that mean? I don't want to be heavy weighted at XLV and Johnson and Johnson. Healthcare, they're going to move together. So if I'm heavily weighted just in those two names, now I've got very binary risk. It's going to win one or it's going to lose zero, right? And I don't want to live in a one or zero kind of world. So I hope that helps. All right, next up, silver. Stephen, I love silver, love gold, love Freeport McMoran, which is my proxy for the copper market. And this is firmly in buy the dip mode. Now, I do not have exposure to silver. It hasn't dipped, hasn't retraced, hasn't reverted to my mean. What I look at, the 21 propulsion of the 34 EMA wave, has not reverted to that mean. Gold, ditto. We are in all my cards on the table. We are in Freeport McMoran, but I love the buy the dip there for those three, all the metals. And then, Stephen, go take a look at XME, SLX. Take a look at the metals and mining's corners of the market like GDX. And I think we're going to see that there's a lot of possibility there, a lot of choices. And I need a dip in silver, right? Whether that be SI futures or whether that be the SLV ETF alternative. Thank you for the question. All right, which futures contract can we use for an entry on TLT? The only one, hey there, Mr. Walker, ZB, ZB. And ZB is your futures contract for the long bond. TLT is not exactly what ZB is, but it's definitely on the longer end of the yield curve. So ZB for that one. ZB for that one. Thank you for the question. Hey there, Kim. No, I appreciate that. I see a lot of you do watch Benzinga. Like I said, I love being on that show. I love letting the folks at the folks at Benzinga, the viewers get an idea of what we do here at Simpler, just to get a feel for, hey, this is how we roll over here at Simpler Trading. Awesome. Thank you, Kim. I appreciate that. Any insight on the gap up in VIX? Hey there, Will G. All right. So VX. Now remember, the gaps we're often going to see on the VX futures and VX. Let me show you another way to look at this. Is remember when we get the contract rolls, your most significant holes in the chart, your gaps, are going to be when we roll, right? Those are going to be significant. Those are going to be significant gaps in behavior. I can't say that it means a whole heck of a lot to me. Do I have any insight on that gap up? I really don't. I don't look at the VIX as a barometer of anything other than the VIX. I don't look at the VIX as any harbinger necessarily to an inevitable drop or fall in equities. I think right now bonds are probably a lot more in tune with where yields are going and where the stock market is going to move based on those yields. I do want to be aware of where we are, no doubt. But when I look at just the context of what we jumped up to, this is still on the very low end of the VIX. This is still very much risk appetite mode. But no, I don't make anything of it because I trade the VIX for what it is. And I would look at the VIX as a potential short the rip. If I look at it purely as a futures contract and not necessarily a market barometer, I like the short side potentially of the VIX. All right, BZB trading, the end of Q1 2023 will be interesting. Agreed. I think if look, if we are looking at opportunity, I love that you're thinking about Q1. We're thinking about opportunity. We're thinking about where bottom picking might start kicking in. It's not going to be now. Window dressing strengthens the strong. Window undressing weakens the weak. Amazon, Tesla. These are very likely going to see lower lows. They're in downtrends. They have been within the last 30 to 90 days. And this is where I would expect more weakness to come in. So window dressing in the other side of that coin is window undressing. Santarelli, tax loss harvesting, they're all really part of the same conversation. And that reminds me, if you haven't already checked out what we've got going on over at countdowntrader.com, get ready for seasonal events. If this terminology, this techno babble is something when you say, Rog, what is Santa Rally? Last 5 trading days of the month, first 2 trading days of the new year tend to be bullish. That's what the Santa Rally really is. Just those 7 trading days in total. Window dressing is going to really exist throughout December with more emphasis on the latter half of December. Window undressing too. Strong gets stronger, weak gets weaker. So if you're still kind of thinking, Ron, I'm not quite sure what to make of this or even how I would process this, check out that update over at countdowntrader.com. I think it ought to help quite a bit. All right. And that was a topic that Trish said, Rog, we need to address it because the lingo gets thrown around, but what's the idea, the strategy, the mindset behind it? So check that out. Let me know what you think. All right. Bill Kennedy, good morning. I have been trading bull puts on GLD. Is there a better equity or ETF to increase gold? I don't know if they have any I don't trade any of the ultras or 3Xs or 2Xs. They probably exist in gold. Billy, if I have, if I'm trying to increase the horsepower, which is kind of what I'm reading between the lines, I'm just going to go with GC futures. Leverage is best there. However, I'm trying to remember if there are any 3X or 2X or ultra gold. I'm sure there is. Just make sure there's liquidity there. But if you're looking to increase your leverage and or size in gold, I just don't know of any other better way than futures. But look, I'm biased. I'm a futures trader. Everything I look at, even when I trade ETFs and stocks, are coming from a top-down analysis. What's going on with the indices, treasuries, metals, energies, currencies, and then I'll go to sectors, and then I'll go to individual stocks. So I'm always a futures first trader. So I'm probably just gonna, maybe that's bias, I'm gonna answer GC, Billy. If you're comfortable with options on gold or gold futures themselves, that'd be a great way to go. Thank you for the question. And I love the long side, Billy. I like the long side there a lot. All right, next up, Alex. In this high vol environment, all right. Do I increase contract size and look for smaller moves when day trading indices? No. I don't let volatility dictate my position size. No. I let the risk of the trade dictate my position size. However, volatility will impact whether or not I have a trade. So I think we're on the same page with that. If markets are very volatile, they're not going to have clean structure. If I don't have clean structure, I'm already hesitant about the trade. I'm already probably passing on it. So I very organically, based on volatility, know if there's a reason to put a trade on in a particular symbol. And I am going to look at it symbol to symbol. I'm not going to look at the markets. I'm going to look at the Dow very differently than I look at the NASDAQ. I'm going to look at the XLI and XLV very differently than I'll look at XLY and XLC. So there is that major discernment we need right now. And in that regard, yeah, of course, I'm going to look at uh, different kinds of position sizing based on how far we've retraced or what the levels are. And I'm going to be looking at different symbols because watch list building is always our first job in that regard. All right, next up, is NVIDIA a buy now? Right now, yeah, it's fine. It's a buy the dip. Yeah, we get a minor low that seems to be forming. I'd keep an eye on a buy the dip. All right. So actually, this will be the last question. Hey there, Mimi. Dow, do I think it keeps going higher? It's got the highest probability to do so. It has the highest probability to do so. The sectors within it are better than the sectors within the S&P and NASDAQ. The Dow is the most resilient of the three. So if Santa is going to arrive anywhere, I would keep an eye on that Dow. All right, gang. As always, thank you so much for being a part of our Charts and Coffee show. I'm going to head on over into the sector room right now. If you haven't checked out what we're doing and how we do it, head on over to sectorsecrets.com and you can check out what we're doing over there. And again, if you're looking for a room where you can uh, day trade and end of day trade, follow trends, etc., I think you're going to love what we're doing. All right, gang. Have a great one. I'll see you tomorrow. Same time, same station.